Welcome to this real price action video series. And this is an important video. Before this video, there was an extremely important video. Those are two videos that are pretty much the key to this video series. Although there were only a few comments asking about issues that weren't understood in those videos, but I know that for the most part, you still have a few sticking points, a few points that are at the intersection between what you understand and what you don't. I don't know if in the past time you have found the answer to your question or not. Well, if not, then through this video, it might provide an answer and bring you an important missing link, so you can understand clearly and more thoroughly what I shared in the previous videos. And after that, when you rewatch the previous videos, you will see a difference. That's the advertisement. But to be honest, at first, I didn't intend to make this video so soon. I was planning to make it in the video that comes next, not to make it at this time. I'm doing this so that after watching this video, you will have something to connect the links from the previous videos. So if there are more videos before this one, it will be better. But now I want to do it right away. When the feeling comes, I just do it. For me, making YouTube videos doesn't have to be as disciplined as trading. Discipline is good, but it depends on the thing. Because if everything is as disciplined as trading, well, life would be boring and dry. Besides, with my current video production frequency, I don't know when I'll ever get to video number 100. And before we get into this video, please relax your mind to approach it with an open mindset, because these might be things that you have never heard before. Let's start now. The market has three main trends: uptrend, downtrend, and no trend, which means the price moves sideways. This is basic, fundamental knowledge that everyone knows. You might even know it without having studied it. But using that to trade is not yet possible, because you wouldn't know where to enter a trade, or how to set a stop loss. Knowing about these three trends is just about seeing with your eyes to know what the main trend is, but to know how to buy and sell, where to put the SL. You need to understand the different types of market movement. In my eyes, the market only has two types of movement. All candlestick charts are just variations of those two types. And from those two types of movement, I can identify the important areas. Those are the normal movement and the strong abnormal movement. There are only these two types. So what is normal movement? Well, it's when the price has just broken a high/low. It immediately returns to retest, and then continues on its way, and it keeps repeating like that. It breaks, then immediately comes back to retest, then continues. If you look at it on a larger time frame, the visual representation of normal price movement could be represented by the fact that green and red candles alternate, or the wicks of consecutive candles keep touching each other in that same spot. But if you look at it on a smaller time frame, it will be represented by the fact that the price moves in a terraced, step-like pattern. So, from this, you can relate, and you can also think that the way the price moves, with green and red candles alternating, or the price moving in a terraced, step-like pattern, in essence, they are exactly the same, identical, with no difference at all. Depending on what you want to see, the trend you are considering, the visual representation of the price, moving normally, can look different like that, but in essence, they are the same. That's the normal type of movement. It usually doesn't create a strong barrier. So then, what is a strong, unusual movement? Simply put, those are the remaining cases. It's not the normal type of movement. Like in this case, the price just broke the high. It just broke and then it's trying to come back to retest the high it just broke, to move normally, just like in the examples above. But this time it failed. It didn't even make it back to retest. and it continued to rise again, continuing to break the high and rise further. So this is exactly the type of strong, abnormal movement. In my view, there are only these two types. And I also see that the important key level is often formed by the strong, abnormal price movement. Whereas when the price moves normally, with alternating green and red candles, or moves like terraced rice fields, it doesn't create an important key level. A candlestick is composed of a body and a wick. And when long and short candle bodies, and short and long candle wicks combine, they can create countless different chart images, so many of them. But in the end, it all comes from just those two forms. And when you understand, you look at it so much that your eyes get used to it. Then when you look at candles, look at charts, you can visualize how the price has moved. You identify the key level very quickly. Now, let's try to go into a few cases with me so you can understand even better. In the first example, let's go into an example that's a bit easy to see. Looking at this, we can clearly see that this is a downtrend. This whole section, you can also see that this is the price moving normally. This means that as soon as the price breaks the low, it immediately returns to retest, and then continues to fall. Then it immediately returns to retest. It keeps repeating like that. Like this place here. Well, these red candles, their wicks keep touching each other here. Here it's similar, it just broke. Then immediately came back to retest and continued to fall. It keeps repeating like that. And here, the price breaks strongly through this bottom, with a red candle with a very long body like this. And there is a phenomenon of wick retraction like this. So this red candle, is it already a case of the price moving strongly and abnormally yet? Not yet. It's very likely that after that the price will shoot up, immediately return for a retest, and then continue to drop again. So this is still just normal movement. It's just that the force is a bit strong, but it still meets the condition. It just broke and then immediately came back to retest. Up to here, not yet unusual, up to here it's still normal. Let's continue to follow along. The price just broke this bottom and then here it has a long wick. But it only came back to retest. Up to this point. It hasn't returned to the yellow line. It only came to here, it couldn't go back up. And then it continued to go down again, breaking through this long candle wick. So now, we can only say that, the fact that the price broke strongly with a long-bodied red candle like this. This is a phenomenon of strong, abnormal movement. You can imagine the price line moving like this. This is a case of strong, abnormal price movement. Let's go back and say, this is the key level of importance, with extremely strong selling pressure. And as I said in previous videos, the consequence of it is, there is a high probability that there will be no stop hunt at this key level. The price has not returned yet. It's still a staircase going down. It's still this type of chart, this kind of form. So, if so, you predict that this downtrend will continue to fall. You want to enter a trade following this downtrend. Then enter the trade here. SL after this and TP down below like this. Continuing, let's go into another similar example together. Well, this is an uptrend. This whole price segment is normal movement. It's just like in the previous example. Well, you can imagine that, this whole section, it just breaks and then immediately returns to retest. or anywhere that's not like that, it has also returned to retest this whole section. You can imagine the price line, it's moving like this. So then, up to here. The price breaks through this peak with a long-bodied green candle. And there's also a phenomenon of the candle wick retracting and going down like this. So at this point, it could still just be normal. Because after that, it's very possible that the price will immediately go down and retest this and then go up. At this point, it's not yet abnormal. Everything up to now is still just normal. But after that, the price tries to return to retest immediately. But it only goes back to here. It doesn't go down anymore, it only came to here, and then it continued to rise again, breaking through this peak. So, the moment it rises again, and it breaks through this peak, is when we say that, this strong green candle pushing up like this is the phenomenon of strong, abnormal movement. You can imagine the price line. Overall, until now, it has moved like this. And this is the important key level of that uptrend. Okay, let's go back. Well, we say, this is the important key level of this uptrend. And at this important key level, there is extremely strong buying pressure. And if you predict that this uptrend can continue to rise, then simply enter a trade here. SL after this, and TP up top. And if you were to enter this trade, then it would also TP very quickly. Through the last two examples, let's review together, summarize, and draw conclusions to make everything easy to understand, concise but still complete. Have you noticed that in the previous examples, the identified key level almost always follows a common formula like this, or not? The price is moving normally. Then suddenly there is a strong force. But this strong force, no matter how strong it looks, no matter how long the candle looks, or if it has many long-bodied candles in a row, no matter what, it could still be just fake. If after that strong force the price immediately pulls back, then it's no good. If it pulls back immediately, then that's a sign from the market that it does not or has not yet accepted the recent strong force. And this is not the important key level. But if after that strong force, the market accepts it with the sign that the market continues to move normally in the previous direction. And when it has moved normally in the previous direction, that means it has accepted the recent strong force. Then this is the key level of importance. This is the crux of the matter. From here you can create a rule to determine the key level of importance, and from here you can also understand even better what is a real breakout and what is a fake breakout. It's even better than the previous candle counting rule that I used. And now, let's do a homework assignment for us to reason together. In this chart, where is the important key level? You might identify this as the important key level. But no. This is the important key level. Why is that? Well, you just need to reflect on the formula I just mentioned above, and you'll get it. For example, the candlestick chart in this case, well, maybe. I should probably save it for another video and talk about it later. Talk about it separately for better focus. Because talking about too many things in one video like this, I'm afraid it will be too rambling. That is the main content of this video. I hope that the way I explained it is easy to understand. When you fully understand this video, watch it carefully, then when you re-watch the previous videos, you will see a difference. From here, the speed of reading and understanding the market will also start to get much faster. And these are the things that are worth spending time and effort to practice. At least for me, that's the case. This video is one of the foundations for you to read how the market moves. From here, finding the key level is more accurate. Then apply the Dow theory from the video to know that when to follow the major trend, or when to follow the minor trend. Basically, that's it. But watching videos is just to open up perspectives. Watching videos can't make you proficient. If you want to become proficient, the only way is to practice a lot. I think that. Just set the practice time in months. To be comfortable and less stressed. Because I also had to take months before I started to see things faster. Even though I understood it at first, I was still very clumsy. I sat and pondered, looking at the charts for a long time. And in this real price action video series, this is an important video. So everyone, please watch it again and again carefully. Goodbye everyone, see you in the next video.